as you are aware that WRC, the Institute of Cost Accountants of India, we have signed a memorandum of understanding with Pune University, and taking this forward, we have this. We are lucky that and so, the Department of Commerce and Management, it is one of the whole country, and we have
Sir, I think
yes, we are not able to listen to Harshad properly.
yes.
I'm sorry. So, is it now audible?
Yeah. Now it is audible. I think you start from beginning.
Oh, I'm so sorry. I'm so sorry. So, friends, good evening and welcome on the topic of corporate governance.
Your voice is breaking. Sir, I think Harshad sir is having some bandwidth issue.
Oh,
Yes.
Yeah. Yes. So, how shall we proceed?
Pradeep, I think Pradeep you should know, Pradeep.
Yeah, Harshad, the voice we are getting in between, but not in a continuous mode.
So, may I now request
Correct.
Dr. Kakar to say a few words?
Yeah.
Thank you very much, Harsha sir and Ranganathan sir, for allowing Savitribai Phule Pune University Faculty of Commerce and Management to be part of this session on corporate governance. And we are very happy we are getting associated, and that's why I have requested that we should have this session together. As a part and parcel of Savitribai Phule Pune University, our commerce student and management student, they wish to start attending your programs and then participating in ICW activities. And I think our course in future is jointly, we can have some kind of program jointly conducted for training of this student. Right now, we are doing all minimum 60 hours of internship of our student with the support of CA, ICW, and company secretaries. But we wish to have this association in a more longer way. And some of our credit courses can be jointly conducted by ICW and us. And that is the idea. And that's why university wants that that professionalism which you carry in your activities should come into our academic curricula, where we have a large number of students as commerce graduates who have a degree, but they do not have the right kind of attitude and skills, I think, that can be imbibed with our joint effort. So that is the idea. Faculty training program and the students' activities can be conducted jointly. Currently, we have almost 19,000 students enrolled in the commerce program as far as the Pune city is concerned. So the number is very large. So if we enhance their employability skill by 10 or 15% with our joint effort, that will have a more mileage for all students and for our country as India to become Atmanirbhar Bharat. So we wish to have this association, and I'm thankful to Ranganathan sir for we are going to listen to him that sharing his thought process about corporate governance. Thank you very much.
Yeah. Thank you, Kalkar sir, for nice words. And yes, I agree with you. Really, the skill really matters. Even though the degree is there, skill is still lacking, and you are rightly taken the point of skill. So thank you very much, sir. So with this, now I would like to move to introduce once again to CS and CMA, Ranganathan sir. So presently he is the general counsel at MCure Pharmaceuticals Limited, and prior to that he is in elsewhere Edelweiss Financial Services, and as well he is associated with Tata Group. As far as qualification is concerned, he is a qualified cost accountant as well as company secretary, and also holds the law degree. He has reached 30 years of experience in various areas like a corporate fields. It is corporate governance, company law, investment banking, corporate restructuring, NBFC, allied corporate law matters. And we can say he is a pioneer of Companies Act 2013, because he was there in a company law review committee constituted by MCA. So we can say right from the birth of this law, he is associated with this progress, and also he is a member of Secretarial Standard Board of ICSI. And he is a senior faculty member for all 3 institutes, various business schools, and also to the Institute of Directors. So with this introduction, I would like to request Ranganathan sir kindly proceed with today's CEP.
Yeah. Good evening, friends. So Pradeep, I'm audible, right, Pradeep?
Yes, sir. Yes, sir. Right.
So good evening, friends, and once again, thanks a lot, Pradeep, and the team for inviting me. Thanks to Mr. B.M. Sharma, Vikas, Harshad. We were not able to listen to him, Dhananjay and Sagar, and Dr. Parag Kalkar. Please, you're most welcome to the institute, and we shall take it forward, the initiative that both of us have started. And thanks to the chapter people who had made this initiative possible. So we'll take it to the next level, Dr. Kalkar. That's assurance is from our side. On behalf of the chapter, I've taken this liberty, Pradeep sir.
Yes,
I'm taking this liberty.
Yeah.
So good. We will also, whether it's a faculty training or the students training, we will take care of it to whatever extent possible. Happy to know that you are already associated with the other 2 fellow member institutes of the Chartered Accountant and the company secretaries. Nice of you, Dr. Parag Kalkar. So, and once again, thanks to the chapter for inviting me in a very short period. I think as compared to last time, I think the number of people who are present is almost triple now, 3 times.
Yes. Parag sir is there, so definitely strength will be more.
Good. So nice of you, Parag, to come and be with us. So, the topic that I had chosen is a very general topic, and at the same time, some technicalities also which we as professionals should know, or whoever is attending this program should be aware of. So that's the reason I just took one very general topic, which we can also, maybe Pradeep sir is a very quite interactive, so we can also get into the mold wherever it's possible. Now, before going into the presentation and other things, friends, how old do you think the concept of governance is prevailing? How old is this concept of governance? Any guess?
So this is governance is a very old concept. Right now we have changed the wording of it, but if we talk about the India or past, like corporate governance is going on in our society from too many decades, or I can say centuries.
I think very good. I think the moment civilization started, I think the concept of governance has also accompanied along with civilization is what I would actually believe. I think now this word is a very buzzword, and everybody starts talking about governance. But let me tell you, friends, how many of you know the English word, the meaning of English word oxymoron? There is an English word called oxymoron. Any guess? Oxymoron. Any guess, friends?
No, it is something like a word given by Shashi Tharoor. Very difficult.
No. It's not Shashi Tharoor, but it's a very, it's quite prevalent, which we are using in our day-to-day life also, Pradeep. Shashi Tharoor, nobody can beat, only Subramaniam Swami can challenge him. So, okay. Now, oxymoron is a word which clubs 2 contradictory words. For example, pleasurable pain. On one hand, you have pleasure, on the other hand, you have pain. two contradictory terms. When you use it together, it becomes an oxymoron. So there is also an oxymoron called business ethics. Dr. Parag is laughing actually. So business ethics. So the question that you and I will answer is, have to answer is whether business kya ethically nahi conduct kar sakta hai kya? Answer is yes, we can. But normally we feel that, as I always keep saying in all my forums and wherever I address, especially about the Indian entrepreneurs, they have the seventh sense. Okay. So, they can find out ways and means to do, at most of the times, to do the things within the ambit of the framework that has been given to them. But they have this vision, they have this thought process. Today, you look at where we are today. India is recognized at least for the skill sets that we have, the intellectual capacity that we have. Okay. Now, having said this, this also goes back. I will just show you a small one side or a couple of slides on, Chanakya Niti. We all know how Chanakya, Arthasastra mein, how beautifully he has covered the concept of governance way back, whatever time that guy was living. But before that, governance, today we are talking about a corporate governance. Governance is something which is an individual driven. As a human being, we are also subject to governance in our day-to-day activities as well. So it starts from individual, how do we govern yourself in your activities, in your behavior. That is where the concept of governance, which we should be. Corporate governance is now, right from 2005 and 6, people have started using it. It was a buzzword for some time. It lost its sheen for a few years, and again it has come back now. Okay. Now, how many of you know the word public governance? Pradeep sir, now the question is slightly different. No oxymoron. Public governance. So this was actually tested. This word public governance is how a king or the ruler of a country should rule the kingdom, or the country is what is public governance. It was actually tested. They tested its waters, and some of us might be knowing, some of us might be really knowing this. There was this US president called Richard Nixon. So way back in 1973, as a president, the first US president was about to be impeached by the Congress, by the US Parliament, saying that, for whatever the scandal that. So for the first time, the public governance was put to test. Okay. Later on, it all spread slowly and then come into the corporate, how the corporates were also functioning internationally, and slowly it got into the corporate culture also as to corporates. How do we govern the governance? Now, when you talk about governance, so one is business ethics, then the public governance comes in, and then let's talk slowly now on slowly come into the real corporate governance aspect of a corporate governance, friends. Let me start with the storytelling. That's then only we will move to the technicalities. Otherwise, half the people will switch on, and rest of the time they will be doing something else. So, your Dr. Parag, your Dr. Kalkar, that's the scene that, So, that's a disadvantage of this virtual. Somebody please mute. Whoever is not speaking, please mute. We are able to listen to your conversation.
Yeah. Because please mute to all. Except
yes, muted.
Whoever wants to speak can unmute, but others please. Okay. So when you come into the corporate governance, things were happening across in every jurisdiction. All the companies were doing their business, and they were doing whatever you call. So since we are also accountants, right from fudging of accounts. The word fudging was not, people did not use. They started using the word manipulation, then coming to fudging, which is a slightly better word so that people don't understand. So sab ho raha tha. Everything was prevalent. Do you think India, everything, it was happening throughout the world, and come the come the 90s. 90s, we know a lot of scams took place, but they are all individual driven scams rather than from a real governance, from a governance angle, which emanates from the companies. That's why if you look at the corporate pyramid, how is it structured? You have the shareholders at the top, you have the board, and then comes the executive committee who run the day-to-day affairs, right? That is how the corporate pyramid is also made, right? Now, when the shareholders have entrusted the entrusted the task of running the business to the board, the board has got a fiduciary duty to respond to the stakeholders. Friends, now the word shareholders have become stakeholders. So now they have to take care of everything. I think it was already there, but now the emphasis is more on all the stakeholders who are involved in the company. So the board, when you talk about the board, everything emanates from that. How should the board be? How should they function? All those stuff, falana, how does it happen? So if you look at corporate governance, the origin goes, again the 90s, when the England, in UK, there was this Cadbury Committee report. Slowly, they started talking about corporate governance, how good practices could be. It's nothing but emphasizing or implementing some good practices, friends. That's all. But the time that we feel that good practices have to be forcefully be enforced on the corporate, I think the ethical context has really lost its meaning. I think ethics, we all know that the ethical conduct and ethics should come from within rather than somebody enforcing it. So that's why, today, if you talk about the governance angle today, is it a reality or a myth? That's one question which one should always be pondering over. The second aspect is it a tick mark exercise or is it a regulatory tick mark exercise? Why I'm mentioning that is because it's a regulatory enforcement on the corporates to follow certain diktats, right? So is it a regulatory enforcement? So since it's a regulatory enforcement and we mostly do a tick mark exercise, but actually one of the, if you see the off late in the last maybe 3 or 4 years or maybe 5 to 6 years, this governance angle has also been given a lot of importance, and some of the companies which really follow certain governance principles in its in spirit are also rated high, and the share market price also gets reflected in it. That means there is a weightage that is also being given to this kind of a activity that the company is following. It is not only on your business or the fundamentals or the technical analysis that you do, but the analysts also give importance to those companies which have the good governing principles that they follow. Okay. Yeah, Dr. Kalkar, you want to say something? Okay. So please feel free to intercept. We can always. So that kind of an importance which is also being given by the share market, by the analysts, so that gets reflected in the share price. So that's the importance that is being given to this. Now this has taken a different avatar now, friends. To be very, I think some of us again might be knowing, or we have been reading at least in the last 1.5 years. There is this something called ESG, environmental sustainability and governance. Now they have added these two things, environmental and sustainability, to this, and talking about this. Hope that ESG doesn't become an ECG for the corporates. Because if you don't comply with this, there should not be a shock, but there should be some shock observers as well. So having said that, if you look at the corporates, the first and foremost, the governance angle or the governance angles came in which event? Anybody can guess in which event this was actually this took? Any guess? Internationally, I'm saying. Which incident actually taught all the regulators across the jurisdictions to talk about corporate governance and introduce some regulatory reforms? Any guess, friends? Come on, most of us are accountants also, right? We should be knowing to some extent.
Satyam.
No. I'm talking about international. Much before
Lehman
Satyam.
Brothers. Huh? Lehman Brothers.
No. Lehman Brothers 2008. Late 90s, it was Enron, Arthur Andersen, chartered as the auditors.
Right.
Kuch yaad aa raha hai?
Yes.
Enron. Yes. Enron was the first one which came to light, in this entire international scenario, where I think Enron was run by so-called professionals, and that's why one always thinks, even from an Indian context, whether the scams happen in family-owned business versus what do you call as the professionally owned business. So Enron, what had happened typically in Enron those days was Enron was the entity formed out of a merger with to a couple of other entities, and it was doing electricity distribution work, friends. So, but mid 90s, you have so many people with management graduates who are coming and taking the role of running the business, and they very, very cleverly they devised some schemes, not schemes in the sense, some sort of a scheme in the sense internally they they wanted to do something, and one such thing that they did was they created a lot of SPVs. Electric distribution, it was deregulated in US, and so they created a lot of SPVs. And what the reason for creating SPVs was, was very simple. We all know how in an accounting parlance, either there is a concept of book value which comes into the accounts, as well as mark to market. Okay, and there is also a very that's what when I say myth, again, valuation is also sometimes, since you factor so many things, it also becomes a myth. So there is something called fair valuation, right? So what these guys tried to do was, they wanted to give more of fair valuation rather than book value or mark to market values in these accounts. And how they were trying to do this was, they were reaping they were showing the profits, which was unheard of. They were showing the profits based on future earnings, and that too from the SPVs. And this was unnoticed by the auditors also, or they may be in connivance also. That's why even Arthur Andersen got was banned for audits and other things later on. And everything was suddenly there was a whistleblower who came and told that these are the things that are happening, and the things was blown out of proportion. And in the meantime, they also entered into, because .com bubble, Pradeep sir, if you remember, late 2000, early 2000 and 2001, the entire jurisdiction, the international .com bubble was some of the things, because every Tom, Dick and Harry wanted to start a .com bubble. Today it is fintech. Right, so these guys also slowly ventured into, they started some video marketing and video. They should not have a guy who was running electricity business is going into video. There's nothing wrong in diversification, but you should have the expertise. But they thought that this is a good business and they would be able to cover up, but some or other that didn't happen, and the share market fell, and all the regulators came and investigated, and finally these people were sentenced, and all those things happened. So this is the first and foremost, if you look at the corporate governance, when it was tested, was Enron and the auditors, what do you call as the Arthur Andersen.
Yeah, and
that is the time that even the statutory auditors started feeling, and even in India, what's the role that they are supposed to play. For example, friends, if you look at today, one of the questions I'm also posing right away, I can pose so that we can discuss slightly later, is the role of auditors plays a very crucial role in this entire episode. We are talking about so many other characters within the company, but the role of auditors. Now, two auditors, it's not only the statutory auditors, friends. We all know the role that an internal auditor should play. I'm talking about should play in an ideal situation. In an ideal situation, what a role that an internal auditor should play. I think that's where everybody started thinking of the role that an auditor should play. Secondly, how the internal auditor and then
Rahul Bajaj mein lagi.
Please, if you could mute yourself, please, Tejas or somebody. Okay, so the concept of emanating from internal audit came what you call as the another jargon which we have been using very frequently these days is the risk management. That's how the thing started. Now come to the Indian scenario. So looking at all these things, and thanks to whatever had happened in the capital markets in the 90s and early 2000 and everything, the regulators also felt and that this is the best time to introduce some of the regulatory reforms in India. So 90s maybe there was this Birla committee constituted and other things, but it did not take shape finally. But it was the Narayan-Murthy committee report that made the regulator, especially for the listed entities, mostly for the listed entities, to say that we need to bring in some regulatory reforms and the governance principles of all the listed entities. And that's why after the Narayan-Murthy committee report of 2003, in 2005, effective December 31st, 2005, all the listed companies were mandated to follow certain governance norms. Okay. Now, when you talk about governance norms, friends, so let me just now get into the PPT. Let me share a small PPT with you. And but before getting into the PPT, also say corporate, you have the shareholders, you have board, and of late, even before the executive committee, you have the committees of the board. Now, what's the so how do you manage? Because ultimately the board is managing everything, right? So one of the principles that governance enshrined was how should I make the listed companies follow a particular board composition? That was the first thing that they decided. How should the board composition look like? Now, should it be run only by the executive directors, or should there be some non-executive directors? A combo of that would be ideal. And come within within the non-executive directors, there was this new breed of directors that came into being, who are now called as independent directors. Okay. Now, independent. Who is an independent director? Any guess, friends? Anybody, please. If you can speak, one characteristic or what an independent director should. Today, if you can become an independent director of a particular company. One aspect. One aspect of an independent director, please. Anybody?
He does not control. Yes.
Yeah, please.
He does not control the affairs of the company.
Affairs of the company. Very simple to put it. He doesn't control the affairs of the company, right? That's a simple way to answer. So day-to-day things and everything is being taken care of by somebody else. But I'm coming. So the role of a board, apart from the executive directors who run the business, is to give strategic directions, right? Is to give guide. Forget about strategy, word and all. Is to guide the board. So the regulators felt that let the new breed of guys called, the independent directors, let them come and join the board. Let the board get diversified. Let the board take different kinds of people with different skill sets, and let us see whether things are in place. So with that intention in mind, first independent directors, the concept of independent directors were introduced. And second introduction was the different committees. So you have Audit Committee, you have the Nomination and Remuneration Committee, the Stakeholders Committee, etc., was slowly, it got introduced for the listed entities. But till the time 2013 Act came, the Companies Act did not recognize, it recognized only one committee called Audit Committee, and that too it came much later. Okay. So having said that, so the board composition, formation of committees, and introduction of a new breed of directors called independent directors was the first step that the corporate governance principles or the regulatory authorities started doing it. Okay. Now, if you look at this scenario versus the regulated sectors, for example, the financial services. Take, for example, the banks, the NBFCs, insurance companies, etc. How were they run? They did they not have any independent director? Most of them did not have independent director because the concept was new to everyone. But slowly what this I mean, at least in regulatory framework, slowly what they had started doing is they introduced a concept called fit and proper criteria. So before a director is getting inducted in these kind of regulated companies, the respective regulators have to analyze this guy's profile and say whether this guy is fit. And that's why, friends, many, it doesn't come in the news, but when many companies, regulated companies approach RBI for banks and NBFCs and other things, many people's profile get rejected because they have an internal scrutiny, they have an internal surveillance mechanism to find out whether this guy would be fit to run this kind of a business. But despite that, many things are happening. That's a different issue. Now, having said this, friends, let me slowly, now only one thing I wanted to emphasize here on this point, rather just for your information. Now, today we are talking about all these composition, independent directors, committees, etc., etc. But it was because I'm coming from the Tata Group, and they had these committees. Let me tell you, I was in Tata Chemicals, and we had, I was surprised to see when I joined sometime in 2000. I was surprised to see that Audit Committee was constituted in 1986. The Nomination Remuneration Committee was constituted in in 1993, and the so-called independent directors were already in place. So the implementation for such a big group was not a task at all, whereas others were crying, made everyone cry about all these things, but it was very simple affair for the group. I think we should salute to that extent as professional, salute that group for that. I take this liberty to do that. Now let me share a small, presentation, and then let's go ahead, friends. Pradeep, is it visible?
Yes, sir.
Yes, sir.
Okay. So this is the question. This is a question which we should ask. We should ask today whether it's is it a myth or a reality? Is what? But this is a small couplet. One of the very famous poets belonging to some 2,500 years back is a Tamilian poet called Thiruvallur, who has written something. And that guy, can you believe, 2,500 years back, he has covered all aspects of human life, including corporate life. He has dedicated some of his couplets only for the corporate friends. And I was amazed to find some of the things on governance. And he has dedicated a particular chapter for M&As also, mergers and acquisitions. So this is not something which is new. It was already read. But come to the Indian scenario. Do you agree with this? Hello? Pradeep? Hello?
Yes, sir.
Yeah, I can hear you.
Okay, fine. So, this is the best way to describe about the Indian thing, where the governance thing, you keep everything, but at the same time, how it could be stolen. So typically, when you talk about this slide, the next we should follow is with this kind of things that were happening across, from an Indian context. But I would not, go with Harshad Mehta, because it was completely a different story altogether. But if you look at Satyam, the Sahara episode, of course, Lehman Brothers was another, internationally, there was another set of guys doing some other things. But Indian context, end of 2008 and beginning of 2009, Satyam episode, then Sahara 2009-10 Sahara episode. And of late, there are many other things that followed suit, and a lot of, for example, the Indigo episode, the Raymond's episode, the Crompton Greaves, and then much talked about so-called the ILFS, the DHFL, the Sirai infrastructure now, all those things are, replete with Indian corporates, kuch bhi pucho, whatever you want. I think we are such corporates that we will give all kinds of incidents and examples, and such. These are some of the famous incidents that had happened. If you look at all those things, I'll just take you 1 second on corporate governance and how Arthasastra he has defined. He has defined everything very beautifully, friends. Now look at how this guy has started describing. Right now, if you go and read all these things, how finally you need to protect, the Raksha, how you need to protect. Why? Because it's in the interest of everybody. So today also, if you look at any capital market or any regulator, ultimately it is the investors who are coming into the play. Now, internal strategies he had, so all these things are fine, friends. But look at this, how he has compared a kingdom to this current corporate structure which we are talking about in today's context. Okay, right from the owners, what we call in a good term, what we call as the promoters. We'll also see what's the role that they are playing and how, as professionals, to whatever extent that it's possible from our side, we should also be in a position to, play a good role in implementing it in spirit rather than on paper, which becomes a very, So the entire thing is built on 4 pillars, friends. The entire governance things is built on 4 things. One is the accountability. Who should take the accountability? That's a question that one need to ask. Is it the entire board, or is it only the executive directors, or is it also the independent directors that they are also responsible? Yes, to some extent they are also responsible. And to what extent the fairness, the companies or the corporates are fair enough, in its transparency to disclose. I'll put that way. So in its transparency in disclosure, ultimately what the regulators expect, friends, whatever things that are happening, if you feel that it is material to the the sustenance of the company, or it is very material, not only sustenance for the growth or for the that the investor should know, it only says disclose. That's the key word that regulators are expecting us to do it. Okay, we'll see. 1 second. The corporate performance, as I think we briefly touched upon, how this also enhances the corporate performance. No doubt, it's like a goodwill, friends. We will never know how this goodwill is created. We have all seen how the accounting entries for goodwill, but it's very difficult to quantify this, this kind of an aspect. And weightage is also being given to such kind of well-governed companies, friends. So, if you look at the valuation of every company, the governance aspect also, maybe the weightage may be lesser than the other factors, but it does play an important role. Okay. Now, the key players, there are different things. The evaluation in India, I'm just skipping this, friends. So the evaluation, as I said, whatever had happened, but Birla Committee and the Narayan Murthy Committee was the first one when it introduced something in the listing agreement of listed entities. And then today, thanks to the the 2013 Companies Act, wherein a lot of things have been incorporated in this act, so that even the unlisted entities are also are being governed properly. Because in today's context, if you leave the unlisted companies to their fiefdom, I think most of the things may not come to light, and most of the things will not come to light. And in many companies, you will find a lot of private equity players also playing, having invested in these kind of companies. But of course, they bring a lot of strategic inputs. They also want the company to run in a far governed manner rather than just to comply with the regulatory requirements. So all those things are are taking shape, and it has taken shape well. And the last one, if you see, despite all the corporate accidents that have happened, today we are governed by, for listed entity, it is not only the Companies Act, but there is something called LODR, also listing obligations, disclosure requirements regulations, which is called in shortly acronym is LODR. Okay, listing obligations. So if I'm listed, what are the obligations? disclosure requirements. Okay, what am I supposed to do? What am I obligated to disclose? Is what LODR primarily talks about. So 2005, as I said, some corporate governance principles were introduced. It was more of what should you disclose broadly in your annual reports and to the exchanges, and at the same time how the board composition should be. But thanks to a lot of corporate accidents that took place, the entire LODR was revisited and revived sometime in 2015. Again, despite that, it did not kick off, or it was it also had its own symptoms of some of the loopholes and which corporates tried to utilize, and that's why in 2017 Uday Kotak's committee recommended so many implementation of so many things. In this, if you see, look at one thing, friends, a couple of things. If you look at, I'll touch upon independent woman director. Okay, now whatever you call it, board diversity, should be in the form of not only an independent woman director, but in terms of the skill sets that the director should be having it. But they introduced a concept of independent woman director. Then they also, so today you are inviting a lot of people to come on your board and be on the board and function as an independent director, but they also fiduciary, or they also owe to, I'll not say vicarious liability, but at the same time they also, they are running them as a trustee for the so-called investors or the shareholders, and that's why now DNO policy has also been mandated for such kind of companies. This is just for your information, friends. So then a lot of things got changed. Now forget about India. Across jurisdictions, a lot of governance principles are getting evaluated or getting evolved from time to time, and that's why finally the best way to come out of this is to put it in the OECD principles, right? So that's why the OECD principles contain 6 fundamental things, friends. What they evaluate and do this effective, that's fine. But what the second one is slightly important, friends. I mean, basic rights of shareholders. Is it being sacrificed? And is all the shareholders treated at par? That's the second one that, again, if you look at here, it talks from a shareholder point of view. Again, disclosure and transparency, and finally, it is on the board's responsibilities that is required to be. There was one report. It's called it's a South African report called the King's Report, friends. I'm not covered in the slide, but it's called the King's Report. Primarily, based on their assessment, what they have done across some different countries, they have taken some examples and found out. And 4 things that they are talking about, I'll just tell you 4 things. One, they are talking about the excessive remuneration that is being paid to the executive directors or the managing directors. That's the first thing. That's why today, if you see, friends, even in a lot of good companies, well-run companies belonging to reputed groups, some of the resolutions pertaining to the remuneration of executive directors have been defeated by the shareholders. Now there is a concept of what do you call the stakeholders or the shareholders' activism has increased manifold now. It's not that only the regulators are thinking, for regulators on one side, but at the same time, you have the shareholder activism through a lot of guidance given by different people like proxy advisory firms. But shareholders activism has gone much beyond what we are thinking of. Second one is the company that doesn't have a risk management framework will be subject to a lot of the difficulties, or a lot of just for want of internal control mechanisms or the risk management framework. There is a chance that the company will not be able to sustain the growth path that it has envisaged. Then the third one is very important, again, board practices. Okay, when you talk about board practices, friends, and this is the important one. When you talk about the board practices, typically in an Indian context, you have what you call as a family-owned versus the professionally managed setup. So normally if you see the scams that happen, it's typically it happens in a professionally managed setup because every guy thinks that he is the king over there. Okay, but in a family-owned setup, if you look at the scams, where does the things start rolling? It is only when between the promoters something happens. Normally the things come out and boomerangs on them and then comes out to the public. Okay, and the board practices in both family-owned and professionally managed is different. Okay, because in a family-owned there is a typically the promoter runs the entire show. Whereas in a professionally so-called, I'll use the word so-called because I feel, friends, many a time I used to feel that we are all people with, professional qualifications, but professionalism is completely different. Are they running the business professionally is what one should ask. Okay, having said that, so this is where from an Indian context we should see. Now, the first incident, as somebody said about what do you call as, let's take a Satyam case first. Okay. Now, what had happened in Satyam? What is the outcome of Satyam? 2008 and 2009, this entire scam happened. Now, just before this broke out, they got the best, what do you call? They got the Golden Peacock Award from the, on good corporate governance principles. Okay, so what was the main thing that was happening in Satyam, which finally I think only the promoter, made a bold statement, came out so that he could not manage, and but there were many other people who, surrounding him who were also responsible for this kind of a scenario. So what typically happened? When did it come to light? It had a subsidiary. It was not a subsidiary. It had a company which was owned by the promoter's family. When that company was supposed to be merged with this Satyam Limited, which was a listed entity, the valuation was so high, and that was primarily that company was into real estate. A tech company, why should it go and take a merge a company into real estate? Because there are a lot of land banks and a lot of other properties. So there was, though in the, what I understand, even in the meeting when there was a some sort of a discontent among the directors, but none of the independent director recused himself or herself from those things, nor cast a dissenting vote in the board meeting. So that is one of the traits of an independent director, friends. Like, how bold, or what is the extent of, what do you call, the emphasis that an independent director can give it. And very rarely in Indian context, you will find dissenting vote in the board minutes. This is what surely happened in the, in Satyam episode. And that is how it came to light the moment, when the promoter, Mr. Raju, could not hide anything. He came out publicly and said that, there has been a lot of manipulations and accounts have been fudged for the last whatever years. And what he did very wisely, a lot of, using the fixed deposits, duplicate fixed deposits he could generate from the banks in connivance, of course, with the bankers, and started taking loan from some other bank using the duplicate FDs. Second biggest thing that came to light was when he had only around 38,000 employees, he was showing as 56,000 and 57,000 as employees, and the cost of those was humongous. All these things were, let's not come into the roots, but broadly, when you talk about this, where is this happening? How is the board listening? Are they really the decision makers? Are these the guys who are really giving guidance, so-called the strategic guidance to the board is what one has to really ask for. So this is what really happened in Satyam, and then we know the share price went down, and ultimately Tech Mahindra came and had to merge Satyam with itself, and and the things now are in a different ball game, and it's been in the hands of some good hands now, and at least the business is protected, but the shareholders lost a lot of wealth. Okay, this is one incident which woke up the entire Indian community, Indian corporate community, or the Indian regulators to emphasize a lot of things. Okay, on one hand, this was happening. On the other hand, you take a typical example of a Indigo. Now, Indigo, what was happening? There was nothing called. I mean, there were two sets of promoters. One was Mr. Bhatia, the other one I'm forgetting his name. What was happening? Both of them promoted this company sometime in 2004-05, and then it was running. All the things were running smoothly. But when there was a misunderstanding among the between both of them, and that's the time when everybody started. Both of them started blaming each other because there was some misunderstanding. So what was that misunderstanding? Again, there was a company which was owned by one of the promoters, saying that typically in airline industries, you have what you call as most of the services are being done by the subsidiary companies. One such is most of us who may be traveling quite frequently, we have this privilege programs given by the airlines industries, right? So one such was one of that such companies. Second one was giving a lot of supplying a lot of materials to the main company. And this guy started blaming the other guys, and this was all a related party transaction, but it was not done as per the, and a lot of money has gone into the other company, benefiting only a particular promoter. So the thing started happening there. It came to light, and regulators also intervened. But thanks to the chairman of Indigo, Mr. Damodaran, who really played a very, very vital role, and that's how an independent director should also play a role whenever a crisis happens in a corporate. Some or other, now the things are been put to rest, and things are moving on. But ultimately, what had happened? In the bargain, in the years between what was happening during this period, during this interregnum period, I think many investors would have lost the wealth. Okay, but now things are on hand. Then we also know a lot of things which was happening around Raymond's. If you talk about Raymond's, it was again, it was a tussle between the family members, between the sons and the father, and that's why it came to light. So despite you being in a family-owned setup and you being running the business for decades together, because ultimately, it's a greed which overtakes. Again, the question of whether all the approvals were in place, whether the things are to what extent the money has been siphoned off, all those things were there. But I think it was only for a brief period. Things are being settled. And Crompton Greaves, another big thing that CG Power, especially CG Power, what was happening again. A lot of transactions with the related parties. We will see related parties something at the last, but related party transactions, it was benefiting only a few guys, and a lot of money was taken away from the system, But forget about all these things, friends. We all know what had happened in ILFS, right? How it's an ILFS if the main company was not or is not a listed entity, friends. And whether it's an NBFC or not was also a questionable thing. But look at the way the things are being run. In the sense, despite being in this industry, despite being in this field, this industry, regulators were not knowing how to administer that. But only later, when they felt that it is running like an NBFC, that the inspections revealed what kind of things were happening at ILFS level. In fact, a lot of provisioning requirements were, forget about, the siphoning of the funds, but a lot of, and the executives were traveling rampantly, not only within India, friends, but abroad. And there was this a subsidiary company called what do you call, ILFS Transportation Logistics. That was the listed entity. It had, being in a, transportation and infrastructure company, it had more than 300 subsidiaries. Now, the question that comes to everybody is, why should a company have such kind of subsidiaries? Though we all know that normally in a typical infrastructure industries, we have subsidiaries that is being created, but there is no need to create such 300 and odd subsidiaries to run the business. So that was also a questionable thing that happened in ILFS thing. Lot of things. Then financial, then DHFL. We know DHFL, again, how the promoters siphoned off the money and all those things. All the executives were paid a hefty amount so that they don't become whistleblowers. All those people were kept mum. And that's how the things are rolling, friends, and that's how things are rolling. But never mind. But what ultimately, so long as we are human beings, so long as I say the Indian entrepreneurs have the seventh sense, all these things will happen. It will keep on happening, friends. But is there a way to prevent? The answer is no. Is there a way to prevent? The answer is no. But what the regulators are expecting was, we have introduced some regulatory reforms. These are all the checkpoints that you guys have to comply with. So what companies have started doing? They have started doing a tick mark exercise of all the things. But who should play that major role? There is always a saying, it should come from the top. It should, no doubt, it should come from the top, because that guy, the promoter should realize the importance, should give significance to these kind of principles. But it always happens, one level above. What I call is one level above. In the sense, there is a clerk or an associate, then the manager, when he reports to the manager should have that kind of a principles embedded in him or her. Then the next level, it also goes that way. It need not necessarily only come from the top. But having said, now the entire realm of governance finally rests with only one body, which is called the Board of Directors. Okay. Now, one of the things that happens is, as an investor or as a stakeholder, I always believe that they are acting in my interest. I think that is the presumption, right? We need to leave it to the people, because that is how the principles of corporates have evolved, and we should presume that this is what is they are all running the business in the interest of the shareholders and the stakeholders. Okay, and that is where the role of different players comes into picture, friends. Now let's take a few people. We said executive and non-executive directors. Within non-executive directors, you have different characters. One, independent directors you have. One, you have an investor director and a nominee director. The investor director takes care of his interest. If I'm investing some 10, 12% or 15% in your company, I will take care of my interest so long as I'm getting good dividends, so long as the company is showing profits. But should they play a great role in this? Yes, the answer is yes. How do they play? To some extent, the moment you have investor director on your board, or there is an investment that's been done by an institution into your company, I think to some extent these principles, the companies start following these kind of principles, friends. So let's move on now. Just give me a minute, friends. I'll just have a glass of water. Now, if you look at the role of key board players, first comes within the board. Who should the guy who should really run the show? It's the chairman, right? It's the chairman. Now, I think most of us might be knowing there is this a concept of board evaluation that is being done at the end of the year. So it's not only for the listed entities, but also for the unlisted companies beyond a certain threshold. The board evaluation is also being done, which we had never heard of. How does the board perform? The only thing that is missed out is, or which cannot be actually put out in a regulatory framework, is the way that should be done. Though the regulators are giving different kinds of clues as to how you can do, and the discretion is with the company till now, how do you evaluate? So everybody gets evaluated in the at the end of the year, the entire board. But one such things, when you evaluate the role of a chairman, does he encourage deliberations to happen in the board meetings? Does he encourage other board members to ask questions, and whether there is a good response from the management side? Or is it that he is an autocrat, he doesn't allow the fair play in the board proceedings? That's one thing where it all depends on who is the chairman of a particular company. So among the board, the chairman plays a very, very crucial role, friends. Okay. Secondly, he is also responsible, when I talk about the responsible for the flow of board and committee meetings, it's not only the items that are being placed before the board, but the quality and the quantitative information that is being provided to the companies. It typically happens, friends, today, when you talk about the financial results, I can't give it to the board members well in advance. It is always tabled at the board meeting, right? So in such a case, it is a bounden duty of the management, especially for the chairman to prevail upon the management, or to dictate to the management that to provide adequate, I'm saying about adequate information, so that the board can take a conscious call within that few hours of the meeting. Okay, so the chairman's role is very, very important, friends, whether it is a in a family owned or in a professionally owned setup. Because even in a professionally owned setup, which I can talk about, is that they create their own empires, which should not happen. So that is the role that a chairman should definitely play. And then comes the CEO. Normally the CEO, managing director, the role is club, and now there is a talk that both roles should be disassociated. And the CEO is the guy who should bear all the risks, because he owns it, he takes the risks, and it is he or she who has to, make the board to implement the decision. So when he is asking the board to accommodate whatever the thought process or the risk that this guy has done it, it's for the board to implement it. So the role that this guy plays is very, very important, because ultimately today also, if you see, friends, anything which, in any corporate, what happens is, when it happens, you talk about the promoter, and today we also talk about who is the CEO of the particular company, because the role that this guy plays is humongous. So please be mindful of that fact. When you also become the CEO, if you're also the CEO already, I think we should be mindful of the fact that we are the guys who are taking the risks, and accordingly, we also owe the same responsibility, moral responsibility, to the stakeholders. Okay. Then there are executive directors and the independent directors. Okay. So in case of executive directors, a guy is inducted on the board in an executive capacity because of his technical expert, or through the the domain knowledge, and he also knows how to run that particular function effectively, and that's the reason we have a lot of executive directors on board. But more than that, it is also the bounden duty of the executive directors to give adequate information to the board as and when it is sought for, or even without that, it is for him to him or her friends also to provide that information to the board from time to time. But Finally comes this very important role. This is the new breed of directors called the independent directors. Okay, now we have different how should you classify a guy as an independent director? You have different technical factors that needs to be, as rightly pointed out initially by someone, saying that he or she should not be running the day-to-day affairs. Absolutely right. But I'm not running the business. I'm not into the day-to-day affairs, but I'm a person who should give some strategic guidance to the board. But in such a case, if that is what is expected of you, you should also, have the wherewithal, have the courage to disagree in certain cases. So in typical Satyam case, though those people were the so-called good independent directors were present in the board, none of them, though they wanted to say no, but they could not do it, and they did not do it. Okay, so that is one thing. Secondly, are you able to take an independent stance and you don't have a herd mentality? Okay, again, independent directors, sometimes what you need to do is in certain cases, which are of routine nature and other things, and if you are very clear in your thought process, I think you should not. You should just go ahead and say yes to many things. But when there is a typical, problems that or the proposals that are being placed before the board, if they have a typical problem, and if you want certain, certain inputs or certain points to consider, one should be very clear in seeking that information from you. But typically in an Indian context, friends, it is more on paper rather than But off late, if you see off late, considering various the accidents that are happening in the corporate field, many guys have started asking questions. The moment you ask questions, you are considered to be a bad boy, and you are asked to, naturally, you tend to, disassociate with that company. And that's the reason, friends, just to tell you, when an independent director resigns today, previously what was happening, he used to say, I'm resigning due to my personal commitments. But today, it could be personal commitments or something, but you are also supposed to disclose. Because today I can say I'm, due to prior commitments and maybe taking a lot of other directorships. So today you need to show where are the other directorships that you are in, and what is the level of contribution that you are making. So there is a particular way in which the exchanges are also asking you to disclose. Okay, and when you talk about approaching with a different lens, yes, as an outsider, how do you view this? How do you view this proposal? Is it in the best interest of the company and the other stakeholders, or is it just for the promoter's sake that you are doing? That is where you need to be very careful, and you need to put down our foot. And incidentally, in my whatever time period, I have come across when independent directors have put down their foot, and many a time, in a couple of instances, they have also given some dissenting vote, friends. So it is all picking up, but it's, as I said, it's an ethical conduct that is being enforced through a regulatory framework. So long as it is a regulatory framework, many people, many companies will try to do a tick mark exercise rather to follow it in spirit. Actually, that is where the entire things come up, where the promoters have to think of implementing it in the best possible manner. It is for them to implement, and to whatever extent, as professionals, we should also be in a position to guide. One of the things that has been talked about of late, is on the risk management proposition, friends. So what is this risk management? Why is it important? Why is it important, friends? Or let's get into the one more thing of friends. I hope I'm audible and you guys are listening.
Yes, sir. Yes.
Yes, sir.
Okay, because it's a one-way thing that is happening, so that's the reason I just wanted to check for a minute. Okay. Before even coming into the risk management, friends, the role of auditors is something which we have. See, we have talked about the different types of people, but apart from this, there are two people whom I feel, or rather everybody, even from the regulatory side feels, is one on the internal auditors and the second is on the statutory auditors. While we all know the statutory auditors has to look into the post-mortem transactions and see whether everything has been complied according to the accounting principles and the accounting standards, etc., etc. But at the same time, the internal auditors, today the responsibility of the board has increased manifold, in the sense there is this, if you had looked into the board's report, there is this something called board's responsibility statement. Now here the board is affirming that everything is in order. I am taking the responsibility for whatever is happening in this company. And apart, in addition to that, there is also a board also has to give a confirmation in its report saying that the entire financial controls, or what do you call, or in line with the company's conduct. They have to give an assurance in its report, that it is conforming to the adequate standards and other thing. It is adequate. The internal controls are adequate enough. Now, when you talk about, you can't expect all the board members to be aware of all the internal controls and other thing. And that is where in each board meeting, when you present the internal audit reports, I think it is a bounden duty of the internal auditor also to make a presentation in such a way that instead of just pointing out, see, many a time what happens, and I think most of you might also be there, many a time what happens is you just present only some, only some normal things which the company would not have adhered to. For example, some GST filing delay ho gaya, all those things, or some other filings have not taken place, TDS direct nahi kiya, or there was excess payment of cash by, say, a lakh of rupees for a 10,000 crore company. These are the things that normally you point out. But typically what should happen is, when they are talking about the entire internal processes and controls, when internal auditor is supposed to see all these things, it is for them to, come and point out to the audit committee that these are all the different areas which requires attention of the committee and the board. I think, as I say, many companies have started following to some extent, friends. It's a question of a time that, every company will be forced to follow this kind of thing. Okay, now, one second, very quickly, let me just see whether we have covered. Okay, when you talk about, I started with board composition and then came to the committees and then the executive committees who run the operations. So when you look at the corporate, how is it getting implemented? How do you say that this company is following the governance principles, whether on paper or whether in spirit? For example, all these so-called tech companies and the startups, when they are coming out a few seconds on, let's see how it is being done in case of an IPO. When it is coming out with some kind of a, when it is coming out with an IPO, again, the price, the valuation at which these guys are issuing the shares or going to issue the shares to the public, that is also something to be pondered over, right? No, it's not that, because every time the promoter's expectation would be far higher than the, the real intrinsic value of the company. And that's where it all starts at that point itself, especially when you want to go into the listed space. Now, what does this envisage? So if you're in a listed space, as I said, you need to follow what you call as the LODR, listing obligation. So if you're listed, you are obligated to follow certain things, which essentially requires you to disclose. This is what this regulation talks about. It's both, based on principles. It is based on principles as well. What is a principle? One main principle behind this is whenever you feel like, when you are in a gray area, whenever you feel like you do not know what to do, please disclose. But that has its own repercussions. It's easier said than done, because I know of many instances where where it is very difficult to comply, very difficult to disclose. But if it doesn't affect, then there could be a conscious call that could be taken. Now, just a slight, I'll not say a deviation, but which is also very relevant at this juncture, friends. When you talk about corporate governance, there is this something called insider trading also, right? Many of us would have heard the word insider trading, and we would not have dwelt at length on those things, but that is also a major thing, right? You're talking about a governance, but how even the insiders, whether they are insiders or trading in the scripts, when they have what you call a price sensitive information, to what extent this company is free of such kind of insider trading complications or the insider trading non-compliances. When you talk about insider trading, friends, it is nothing but being an insider, being private to some information, private to certain information. I stand at a better footing than the others, and I try to use that information for trading in my shares, and that is how I stand to gain as against other investors in the company. Okay, friends, Pradeep, just give me 1 minute, please.
Yes, yeah.
One minute, please. Yeah, I'm back. So what does this LODR requirement talks about? First, it talks about, just listen, friends, so that I may not look into. So first, it talks about the board composition, which I said. Now, board composition, it talks about in two scenarios. One, who is the chairman? What is his category of directorship? Is he an executive guy who is chairing, or is he a non-executive? Simple. It talks about into two categories. So if you have an executive chairman, that's an executive director or a managing director as the chairman of the company, then it says more than 50%. It's all just for information and knowledge, friends. That's all. There's nothing great. Ek bar sun lo, and I think it is enough, friends. So if he has an executive capacity, more than 50% of the board should comprise of independent directors. And if the chairman is non-executive, it is enough that 1/3 of the board comprises of independent directors. That's all. That's the simplest of things that you should understand. Second thing, now it all goes on to say, Companies Act also says, and the LODR also says almost the same thing, that it has given certain attributes that before a guy is considered to be an independent, he or she should be following this, and only when he is not following in any of this when he is not falling under any of those restrictions, then he or she can become an independent director. Okay. Now, what was happening? I also talked about the Skinks report, which talked about excessive remuneration that is being paid to the. So now, though there is nothing directly on the on the executive compensation, but when it comes to the promoters, when it comes to the promoter directors being executive, it very clearly talks about there is a limit. I'm not getting into the limits and all. You need not worry about that. But there is whenever there is a promoter director occupying a position of an executive position, then there is a limit beyond which remuneration should not be paid. Again, it is based on profits. That's one thing. Even on the non-executive directors, there is a small restriction that has crept in. It's very simple restriction saying that some of the companies, what they were doing is, among the non-executive directors, they were paying a lot of money to one non-executive director, whereas the rest of the people were paid lesser than what. So there is a cap that has been kept. no single non-executive director should receive more than 50% of the total commission. Just for information, just and again, it had kept the frequency between 2 board meetings, how it should happen, and all those things, friends. So now let's come to the main committee, friends. There are many committees, many in the sense a couple of committees which are very, very important. One is the Audit Committee, the Nomination Remuneration Committee, the Stakeholders Committee, which is very, very important. That is also one of the. Before getting into this, there is also, as I said at the beginning of the at the end of the year, there is a board evaluation that gets done, and before a board evaluation is also getting done, the independent directors are supposed to meet alone, other than the executives directors present. That means they have to meet, they have to talk, discuss, deliberate on the company's performance, on the board's performance, the chairman's performance, if he is of an executive thing, and they have to come and present it to the board saying that everything is okay, but these are all the things that you might have to improve, other things. For example, in one of the things when the chairman of Independent Directors Committee comes and tells to the board, saying that the risk management framework has to be strengthened. Secondly, the quality of information that is required to be made is also to be improved. I think that's the suggestions that they are telling the management. So there is this independent directors also meet separately in a year, and then there is an evaluation that is done. These are some of the things, whether it's in the right interest or not interest, so long, we are human beings, so long as we take our own step, and so long as we have the, I know of some independent directors, though there is a, independent directors can't be appointed for more than 2 tenure of 5 years each. But these guys have been on the board from maybe decades, in the same company. But when you talk about ethical conduct, when you talk about these things in spirit, friends, if I've been attached to a company as an independent director for the last 20-25 years, and even after this restriction had come that I cannot be in for more than, I should have taken a bold step of saying that, boss, enough is enough. Now this is talking about 10 years. I've already completed, but I don't think any director, independent director in India had taken such bold step, friends. But that is where the concept of following ethics in spirit comes in. So it all, again going back, it all starts, and you need to demonstrate as a board member, as an independent director, you need to demonstrate not only to the company, but to the outside stakeholders as well. Now, why this formation of committees is important? Why there is a need to have these committees? Why can't the board only deliberate? Now, that is where, as I said, way back in 86, Tata Chemicals had this, Tata Motors had all these committees, formation of committees, especially the Audit Committee. The reason for forming a committee is to have a small number of people from the board, and making them deliberate at length to find out what are the consequences or what are the outcome of it, so that the entire board need not discuss at length. And it is for the Audit Committee. Now, the role of Audit Committee has increased tremendously, friends. Sometimes when you read the responsibilities of the Audit Committee, you'll be surprised that the power that these guys have and the responsibilities that the Audit Committee has is far more than the board. So the Audit Committee is something which I'm giving you some small reference about the financial statements. For example, the financial statements, they are supposed to review and then recommend to the board. But are they really reviewing? Because that is where you need, accountants like us, on the Audit Committee, where we should be in a position to, not only know what is being presented, but also help the other board members, other committee members to know whether everything is running the way it is, and whether the accounts have been prepared. And this is where, as accountants, we also know, friends, one of the major things that comes up, especially during any audit, whether it's a quarterly unaudited or whether it's an audited thing, whether to make a provision for a particular item. This is a constant thing which happens across corporates, across companies. While the management will not want to provide for a particular thing, but the auditors might be insisting on such kind of a thing that is required to be, a provision is required to be made in the account. And this is where the challenge comes, where the auditors, when they make a presentation, when they present their observations to the audit committee, when they emphasize that this is what they should do, the audit committee should take a conscious call, or find a balance between what the expectation of the auditors and the reality that the management is showcasing. I think that's one of the roles that they have to play. Fine, auditors appointment is fine, but three major things, friends. I touched something on financial controls, but financial controls is something which the audit committee has to time and again has to review the internal financial controls, and they should seek information. But the problem that happens in Indian context is, most of the board members or audit committee members, they don't seek information, and that's the biggest drawback that when you talk about governance. It's not that you need not get into the micro level details, but at the same time, there are certain things. Suddenly you can talk about the delegation matrix. If you are in a banking sector or in an NBFC, you can talk about delegation of powers, and the provisioning policy. All those things could be discussed, and they should seek some information on that. And similarly, when you talk about intercorporate loans, to whom are you lending and from whom are you buying? What are the terms and conditions that are embedded in this? Is it advantageous to the company or is it not advantageous to the company? These are the things that one has to take. Related party, I'll come slightly later, friends, slightly after some time. Will slightly will deliberate on related party transaction and funds utilization. When I'm talking about funds utilization, whenever a company, whether it is whenever they are raising money from the public, whether it is through a private placement or from the public, they have to audit committee have to monitor the utilization of those funds, whether it is utilized for the purpose for which it has been borrowed or from and whether it has been implemented properly. So the role of audit committee is something, it has taken a huge shape now, and they play a far better role even what it was envisaged. And that is where all the audit committee chairman, if you look at audit committee chairman, he will be a person, most of them I had seen is a chartered accountant or a cost accountant or maybe a finance guy with a good background. But I would feel, an accountant like a chartered or a CMA could be a far better choice, because let me tell you, friends, as a when you present it, it's more than the financial angle. It is the accounting angle also which needs to be checked in, right? And so that's where I feel if the board is if the audit committee chairman or a couple of audit committee members are from that background, it will really be a effective committee. That's one thing. So nomination and remuneration committee. So today, somebody has to mute, please. Okay, good. So when you talk about nomination remuneration committee, friends, now today, how do you select a director? Is it something available, across on maybe independent directors? They are all supposed to enroll with the Institute of Corporate Affairs once they become, and there is a pool that is there. You can go and select. But will you and me, if we are the entrepreneurs, if we are the promoters, do we select that way? It is not. It doesn't happen that way. It is only through the references. It's only through references that this will happen. So maybe tomorrow Pradeep might recommend my name to some people, because we know now that this guy is thoda to isko kuch aata hai karke, Pradeep might be knowing, and I can suggest Pradeep's name. So it is only through the references that these things happen. So when there's nothing wrong, because the promoters have also, he should also understand the culture, he should know the business, all those things are very, very important, no doubt in it. But at the same time, the NRC also should get into the profile. They should do their own discrete diligence. I think that is what is expected. These words cannot be put into the text, or it cannot come in a regulatory framework. But what is expected typically, or what is the expectation, is that whether a distinct, a discrete diligence is done by this team is what is expected of. It has a lot of things. Now, going forward, even the skill sets, once in the listed space, you have to mention the skill set of each of the the independent directors also, of all the directors rather. What is the skill set, whether he is a financially capable, technology, whether he knows the technology, whether he has a legal background, whether he has a, he is a, all those stuff, the technical capabilities have also. Look at the listed companies corporate governance report. Friends, so even my request to all of you friends is, whenever you have time, and more than time, whenever you have the mood, look at the corporate governance report of some, take some big companies and also take some small companies, chota companies, and see. Sometimes you will be surprised that the chota companies would be in a far better, would be giving a lot of information than the so-called reputed and the large conglomerates. But please have a look at it. You don't think that it is only a question of statistics that is given, but you will get a lot of information from that. So while looking at that, also one of the other requirement that is being talked about, I think one reference that I failed to mention here is Audit Committee. Audit Committee should also look into the management and discussion analysis, which forms part of your board's report in the annual report. So when you talk about the management and discussion analysis, it's nothing but entirely it is on the business that the company has been running for the last 1 year, as to how that is being embedded, how the management's view on the, how the management is putting across all its functions and the business in the form of a management discussion analysis report. Please, I would urge each one of you to look at some of the things to understand far better how this is getting reflected and what it was, a decade back. Then the stakeholders committee, fine, it is more to do with the the investors community rather than anything else. Normally this is all being taken care of by the registrars, who is the intermediary between the company, and so we do not much worry about this. But in case of the stakeholders relationship, I would only see that, I just remember one thing, a lot of companies pay dividends, right? And from an Indian context, all the listed entities are supposed to have, or mandated to have, what you call as a dividend policy. But I don't know whether from every company, every listed company has given, if you see their website, they have a dividend policy, though the intention is good, that the dividend policy. And so what the stakeholders relationship committee should ask, in a particular year, if dividend is not being declared, or if the dividend is much lower than its normal practice, how are the shareholders going to be taken care of? Then that is where the dividend policy will come to its rescue. So when a dividend policy is being formulated, is being framed, I think we need to be careful of that fact and adequately design. And if a company has raised money from through debentures, or is the company servicing the interests properly in time, or is there a delay? If there is a delay, what's the reason? Or the the bond holders, how are the debenture holders are being advised on this front, and what is the repercussions that it will have on the company, is what this committee should ideally look into. Risk management committee, I've talked about risk management committee. So the cyber security is also one of the reference that nowadays everything is technology driven, right? So this is one of the factors that the regulators are emphasizing on this. In fact, in case of financial services company, the IT committee, the Information Technology Committee, is a mandated committee. So you should have that committee. The only good thing that happening in this IT committee and the risk management, you can also have the working executives as a part of this team, because then it will give a lot of, the members will have a lot of inputs from the, from the executives, so that they can take a conscious call. Now, one second, there is a duty of director. These are all more like English, which we need to comply with, but everything comes from. Then there is, if you look at independent directors, friends, an entire schedule has been devoted in the Companies Act for the independent directors, the role of independent directors, how they should be involved, and other things. I know if you are on the capital market side, or if you are attached to the financial services, where RBI is also it is very carefully, it is also looking into the role that an independent director plays, and whether not only that the compliance officer plays, or the the CFO is playing a role, and RBI and SEBI is very clear, or more than this, IRDA is also very clear about the roles that these guys play. Okay, now let us come into the related party transactions. I'll come to whistleblower. I'll end with whistleblower. So when you talk about related party transactions, friends, what is expected? The Act or the regulators don't say that, you don't do a related party transaction. It doesn't say, it doesn't prohibit at all. Okay. The only thing that it mandates all the, the listed companies or even the unlisted companies is that, boss, three things that you need to follow, friends. One is the principle. Are you following this principle? Second, are you, what do you call us? Whether are you taking the adequate approvals? And the third thing is, are you disclosing? I think these are the three things that one needs to be careful of. So first thing, when you talk about the principles, what does it say? Two things that you need to consider. One is because entire governance principles finally, is emanating from the related party transactions, friends. Okay. Now, the principle is, one, is it in the ordinary course of business? What do you mean by ordinary course of business? Am I doing it in my normal business, in the normal course of my business, what I'm conducting, or is it something abnormal? For example, a chemical company, suddenly wants to acquire a land bank in Gurgaon. It is completely outside his purview. You might say it is a part of my objects clause, memorandum permits, but is it necessary at this juncture? And that's typical what had happened in Satyam episode. So the first question is it in the ordinary course? Fine. If it is in the ordinary course, fine. You need an infrastructure to set up a plant. You need an infrastructure for an office space. That's fine. It's in the ordinary course of business. Second is most important things, friend, is at arm's length basis. I think most of us would be knowing at arm's length basis. For example, arm's length, this concept came from your transfer pricing things, right? From the transfer pricing. Is it at arm's length basis? That is, will you do the deal at the same term, on the same terms and conditions if you are dealing with an unrelated party or with a third party? So these are the first two things that you need to check for. Second thing, what happens if you satisfy this? Second things comes is, have you taken adequate approvals? Is the audit committee being kept informed of all the nitty-gritties of this transactions, of this transaction? So have you kept informed them? Have you taken their approval? And if required, next comes the board approval. And then beyond a certain limit, it goes to the shareholders. Okay. Now, what was happening typically, when you do the, it is on one hand, it is talking about ordinary course of business. On the other hand, it is also talking about getting approvals of the audit committee. Right. So there is this concept called at the beginning of the year, all the companies, they have a liberty to go to the audit committee and take what you call as an omnibus approval, friends. So if you anticipate that this is in the ordinary course of my business during the particular year. If you feel that this is going to be of a repetitive nature, please mention it. What could be those and what is the quantum of amount, and with which related party are you going to transact or enter into this deal? So the Act is also giving. See, all these things are evolving. I think every law is evolving. It has to evolve. It has to give importance, or it has to factor the current environment, and then only otherwise regulatory framework will be will not have the respect that it has. So it has also to live up to the developments that are happening, which I think regulators across the world, they are conscious of this fact. And so once you have this kind of a thing, then you can enter into what you call as the related party transactions. But despite all these things, in fact, in between the year, during the year, if you come across a related party transaction which is very vital for the running of the business, yes, go to the audit committee, take their approval, and then get it done. I think there is nothing wrong in doing that kind of a thing. Second thing, what it talks about today is any related party, whenever there is a transaction, whenever it goes to what you call as apart from the board, whenever it goes to the shareholders, the related parties cannot vote on such kind of resolution. This is a good development, I would believe, that none of the related party can vote on a particular resolution or the proposal that has been placed before the shareholders if it is a related party transaction. And as I said, now principal approvals and then the disclosures. What are the disclosures that you are doing, and is it adequate? No, adequacy, they have fixed a particular format. Hello?
Okay.
Yes. Kamal sir.
Yeah, I think now it's closed now. Am I audible now?
Yes, sir.
Yeah, okay. Another few minutes, friends, please bear. Okay, so there's a disclosures that are required to be made. But now, how this has taken a shape post certain, again, corporate accidents. Now, this is a very simple thing. It's a related party. I disclose it to the in the committee and everything. But there are some things which had happened, which has made now. 1 second. What is the recent thing? Now it talks about previously what was happening was it was talking only about a promoter and a promoter group beyond a particular holding, that is more than 20%. If they were holding it, then it becomes now it talks about a promoter, even if he's holding a single share, or if it's a corporate promoter, even if it is holding a single share in a company, if it is a related, then everything has to be taken through the approval mechanism and what do you call as disclosures which are required. Now effective 2023. Now this is the Khatarnak one which has been really, and again unless otherwise there is an incident that happens, it's very difficult for us to, for the regulators also to change. Now tell me, friends, just read the very, very different one. Whereas a listed entity or any of its subsidiaries is on the one hand, and a related party of the listed entity or any of its subsidiaries. So even if a subsidiary, there is a related party only with a subsidiary, but if it has a transaction with a listed entity, to put it simply, if it has a transaction with the holding company, then this will fall under the realm of related party transactions, which has to undergo these principles and the disclosures and the approvals. The second one, if you see, this is the most very, very important thing, friends. Now, typically this, any guess of this, why this has come? Which is the incident, friends? I think sabko malum hai, but we may not be able to correlate. But we know, if I say yes, I say that incident very simple, the ICICI Bank episode. where what has happened today. I mean, today in the sense at that point in time, the bank granted loan to a particular to Videocon. Whether it was finally it turned out to be that money was routed for a company which was owned by one of the CEOs or the executive directors of the bank.
ICICI.
Correct, ICICI. So today,
Yes, sir.
What is going to happen effective next year? I think, I don't know why they have taken, it should have been 2022 itself, according to me. Now it says, boss, now imagine the amount of, I will not say scrutiny, but the review that an audit committee has to do before it places, it gives its nod for a particular type of a related party transaction. And that is where I think the things are going to take a different shape. It is more of a disclosure other thing, but if you are a audit committee member, all the more please seek information, so that ultimately what will happen, so long as we are a member of the board or a member of a committee, so long as we seek some information, adequate information that is required for approving a particular transactions, I think will be protected. That is from a liability side. But at the same time, as a professional on the board, am I doing this is the question. Now today, whenever you feel, there are two ways of doing this. One, when you know that a particular transaction, is slightly or even indirectly related, please recuse yourself from that meeting, from that proposal, from that deliberations. Or secondly, put across all your, and you should put across all your interest in that company and allow the other members to take a conscious call and don't influence. I think that is how it has to be, but only a time will tell how many such things will happen. This is again, I just the latest things which are in vogue and which is really going to shape the entire corporates, Indian corporate, especially the listed space, friends. So disclosures that are required, liability. So as I said, you will get immunity from so long as it is not. Now, typically if you say that, knowledge and, consent and connivance, knowledge, where the violation occurs without their knowledge is fine. But the only thing what it requires is whether are you following the processes correctly. The processes in the sense you should be, if you are a member of a board or a committee, you should know what's the process that you need to follow. Because I find even a lot of directors also, they don't, they are not able to distinguish between a private limited and a public limited also, or a listed entity for that matter. And that is where, if you are a member, you should be careful, because all these things, friends, as professionals, we can help the company. We can, to some many extent, we can try to comply with all these things. That's not a major thing. But ultimately, please, friends, remember one thing: if you are on that hot seat of, where you are interested with complying with these things, that is where even when the things goes wrong, it is only you who will be, and will be the person first who will be asked to explain the entire, all the details. Secondly, it's also the board's responsibility to, to give adequate information, and at the same time, after giving adequate information, justify why this is required, why this particular thing is required. I think if you have those kind of principles that are enshrined, and if you follow those kind of a principle, I think it's the best way to go ahead and do the business. I think we talked about, 1 second, Pradeep, sorry, I'm extremely sorry. 1 second. So we did talk about the role of the internal auditors and the statutory auditors, but there are, there are also other guys, to some extent, I would believe the bankers in the day-to-day things, which they also feel, they should also be in a position to at least at least whenever the things are going wrong, whenever they feel that it is something is, I'm not saying alarming, but something is going wrong, and they should cut it in the bud. And credit rating agencies also, whenever they are rating an instrument or a borrowing program, I think they should be dispassionate and and they should view the company as a and that is how I mean, these are all some of the things that so long as you follow, so long as you have then the things would be. So shareholders activism, friends, I just briefly touched on shareholders activism. One is role of proxy advisors. Let me tell you a brief about proxy advisory firms. There are some 5-6 in India, and internationally there are many proxy. They basically, what they do is whenever the companies come out with some resolutions requiring shareholders approval, they study the need for such kind of resolutions, and then they advise. They put it on their website, and now this has created a lot of hue and cry among the corporates. A lot of conflicts, a lot of disputes. I mean, a lot of heated discussion happened between the proxy advisors and the companies as well. So now the stakeholders are conscious of this fact, and they do refer to the advice that is being given by the what do you call as the proxy advisory firms. And especially, for example, if when you talk about insurance companies and the mutual funds, friends, there is this something called stewardship code, where both the regulators are insisting that when you vote on a particular resolution, being a manager running a mutual fund, or or as a insurance company, when you invest your money in some in other corporates, if you are voting for a particular resolution, I will have to say whether I have voted for or not, and also give justification for that. So it's not only the retail side of it, but also from an institutional side of it. This is all. That's how the shareholders activism has increased manifold these days. I think I touched on excessive remuneration that is being paid to a lot of MDs and the CEOs. Appointment of directors also I touched upon, and new directors, again, the skill sets have to be evaluated. I'll just conclude with I can't take the names and all. I'll just conclude with recently somebody, one of my friends, professional friends, he asked me about a guy who was SEBI has passed some orders against that guy. Okay, and he was I think he was the executive director or a whole-time director of a particular company. No, 6 mahine bhi nahi hua. I think he said 6-7 months or 8 months kuch hua hai. That's all. Can he be reappointed to the board as an MD? This was the question that is asked. And so long as these kind of questions come to us, I think the governance principles, I think it's only more of a preaching than a real implementation. So friends, as professionals, I would only request and suggest that wherever it is possible to put down our foot, we should try to put down our foot. And whenever the board also requires some sort of a guidance, we should also be in a position to guide it properly. And finally, let me end with the do's and don'ts for the companies or for the directors. More for the directors here, it is, more than the do's, you get into don'ts. Some selective disclosures is, some of the companies resort to this. Whenever they have good information, they disclose. Whenever they have a bad or the information is not of a likable nature, they don't disclose. But you can't be choosy. If you're disclosing, follow one principle. And secondly, if you're on the board, every director feels that I think he has come from a different planet and nobody should ask him anything because he feels that he knows everything. That's the biggest mistake that each and a director commits. As I said, some people also don't know the difference between private and a public and a listed entity, friends. So I always used to advise that they should attend some classroom sessions and get familiarized with this kind of things, and don't aim for CG awards. We started Satyam saying that they got a golden pick award, but don't aim for that. That's not is required. But more than that, is the board and the shareholders and the stakeholders, or at the end of the day, are they happy, is what ultimately one has to see, and that depends on how the directors contribute and also the quality of disclosures that are being made, friends. Now, finally, if you look at all these scams, or sorry, all these governance episodes that have come to light, or through the whistleblowers. Now, in order to avoid this whistleblowing, and in order to, I'm not saying to avoid, but in order to, why should a whistleblower, why should allow somebody to blow the whistle against a company? So the active enablers, I would feel, I'm keeping auditors at the top. The rating agencies, everything we covered in bits and pieces, but all these people are the most essential people, so that the management realizes what it should do and run the business the way it should be, without sacrificing the governance principle, friends. I think that is what I have today. Pradeep?
Yes, sir. Thank you, sir. Now
So
it's time to have question and answer. I request all members, please unmute yourself and ask the questions,
if any.
Yeah.
Sir, say some word on the Bharat Pay controversy.
Oh, okay. Chalo, very good. Chalo, Bharat Pay controversy. Chalo, I forgot to touch on that. Bharat Pay, again, typically what is happening is that there is clearly, it's a private limited company, friends. As of today, it's a private limited company, right? So, and very clearly, there has been a siphoning of the funds without nobody questioning what was happening. Now, when there is a dispute among the promoters, then all these questions are coming to light, despite the company having a, financial investors. So again, going back, to say what is happening in Bharat Pay, ultimately it is the person who is involved, a founder himself, trying to take away money. It's in crores and crores, right? So it is completely out of the picture. And in terms of recruitment, a lot of things have happened in the recruitment side, where money has been thrown away to a lot of people who are non-existent. The thing is that at least what had happened in Satyam, where the employees were shown, where non-existent people were shown as employees, here also non-existent companies were paid money into this. It's completely, in my view, whatever the readings that I have and whatever the documents that one could see, it's a complete violation of principles. Such kind of companies, when they come out with IPO and all, the regulator should be all the more careful about how these companies are doing it. So a lot of inquiry is also being made. At least internally, there is an inquiry that has started, right? Yes, that's the thing. Bharat Pay is also, no doubt, there is nothing called, it's a complete violation of corporate governance principle. That is where I'm saying, these guys will come out with an IPO in the next 1 or 2 years. But who should build the cat? So this is bound to happen, but that is where, unless otherwise, the promoters themselves have that thought process very clearly, unless they have this framework of mind that I need to follow certain principles. It is not even ethics. It's just following the road traffic, right? Road traffic signals. It's as simple as that.
So what is the protection of the minority shareholders in the corporate governance?
So the minority protection shareholders, you have what you call as the lawsuits you can prepare, you can do. But at the same time, what do you do as an investor? Minority, we call minority shareholders. Ultimately, SEBI is also talking about protecting the minority shareholders, right? Are you doing some sort of a diligence? We also go with the herd mentality, right?
Okay.
So are you before even investing a secondary market made tomorrow, now by this time, come Sunday night or Monday morning, you will talk to somebody and say, which script kharidun kya? So immediately you also tend to. But as professionals, I would spend some 15-20 minutes. I'm not saying more than that also. Just who are the promoters? What is their performance? Are they regular in dividends? Some very 4 parameters. Are there any major litigations? You and I know where to look into the accounts. At least as professionals, friends, tell me who has asked this. Are we doing this? The answer is no. So I think going forward, I think if everybody see the amount of investments, you asked the right question in the sense the only 2 to 4% of people, retail public, were investing, but now this has increased very nicely. It has increased, and the statistics say that it has gone up to 9 to 10% now. But at the same time, when you want to protect this is also one way as to read something. Thoda, at least it should start from professionals like us, is what I believe, and that is why there is nothing called no regulator will come and give you a protection. Nothing will do, because the typical of the stock market is that the feature of an equity is what you are taking that risk. Okay, and so that is where the minority shareholders have to be careful of before they choose a company.
Okay, sir. Okay.
Okay. Yes, please. Anyone else on now?
Yeah, sir. My question is about the related party transactions.
Yes, please.
The lending bankers are making a lot of fuss about the related party transactions. They are so skeptical about it that they keep defining the the new requirements, quarterly statements from the statutory auditors and all that. Even when the transactions are between the holding company and the subsidiaries, and those are the genuine transactions, like.
Yes. So see, there are two things. See, ultimately, if you see the related party transactions, दो चीज क्या हो सकता है? Either it is within the group companies, which is the subsidiaries, right? The second one can happen with the parties who are related to each other than the holding subsidiary relationship. So that is where the embargo is going to come, where it is also talking about that ultimately, it's a power of the audit committee, rather the duty of the audit committee to examine whether it is going to benefit a particular related party, even though if it is with an outsider. So the lot of emphasis, that's what, friends, what I'm trying to tell you is disclosure, which is very, very important. Please, whenever it is possible, please disclose this. And that is the best way to come out of this. Please disclose, and audit committee should deliberate at length in the audit committee meetings. I think the second most important factor is that the audit committee has to deliberate at length, because as I said in the Tata Group, for example, friends, let me tell you what we used to have a different mechanism. We used to have different plans at different locations, and one of the thing is, apart from the results which used to happen every quarterly, we used to have another 4 board audit committee meetings, only audit committee meetings through where we consider internal auditors a report of a particular plant. And that is rather if you're in some other business, particular vertical business, you should consider, which I think that is how you should start developing, and that is how the more and more information you should give. I mean, not the confidential information, friends. At the same time, also be mindful of the insider trading regulations. Yeah, Jagdish bhai.
Sir, excellent deliberations, and we really love your presentation. The only request is if you can share the copy of your presentation on our emails.
Oh, definitely, Jagdish.
Yeah,
I would.
Thanks a lot, and shall be looking forward to more of such.
Yeah, definitely. Not an issue at all, friend.
Rao sir, would you like to ask something?
So can we have your contact details, like email ID or in case
before you asked, it is on your chat box.
Thank you so much.
So just, only first time when you send me a mail, just identify yourself that you are part of this session or something, so that it will be useful for me.
So your email ID?
They sent, sir. Sent, already sent. Hopefully, because, though I'm a cost accountant, but I'm more into corporate laws, practicing into corporate laws all these years, so I thought how this will be taken, that's why, everything has to be, you need to club the stories. Otherwise, you guys would have left, Jagdish Bhai would have left much earlier than you would not have sat till the end, right? So that's why you need to club, because the more and more you talk about this, it will be an unending thing, and you will not have a clear-cut answer for this. So thanks for patient listening. I think that is what I need to thank all of you for very patient listening throughout this 2 hours of thing. And once again, thanks to the chapter and Mr. B.M. Sharma for introducing me to this chapter. Though I belong to, I've taken a lot of things in the Navi Mumbai chapter. And thanks to Dr. Parag Kalkar for coming and blessing us also.
Yeah. Yes, thank you, sir.
Thank you very much, sir.
Yes, thank you, sir. Parag sir, would you like to share your thoughts on this webinar?
No, it was very excellent presentation, and we have gone deeper into the nitty-gritties, but it was not boring, but with the examples and all other details were shared by sir. It was very interesting throughout the session. Thank you very much.
Yes, thank you, sir. Now I request our PD committee chairman, CMA Sagar Malpure, please conclude the session with vote of thanks.
Sure, sir. So on behalf of Institute of Cost Accountants of India, I would like to thank you, Ranganathan sir, for taking out their time, and they have guided us on this topic. So thank you very much, sir. On behalf of the complete chapter WIRC and the institute, I am extending vote of thanks to you, and definitely in future we would be having much more sessions like this, and on that we will be in touch with you. This is the start with which we have started the first point of contact with the we have established the contact between you and the institute, and definitely would like to extend this relationship further. So we will be in touch with you for
Sure.
new sessions and with the new topic, and I hope all the audience, all the management committee members, all the members, and all the students who have joined the today's webinar, they have got most of the things what they were expecting from this seminar. So thank you, sir. Thank you once again for taking out your time and guiding us.